Good afternoon and welcome to today's webinar on financial crisis in Myanmar. My name is Shahriar. I'm an associate professor of banking and finance at Monash Business School, and I coordinate the center, the South Asia Research Network within the Center for Global Business. We'd like to start this event by acknowledging the traditional custodians of the land on which our 4 Australian campuses stand, and we pay our respects to their elders, past, present, and emerging. This webinar has been organized by the South Asia Research Network within the Center for Global Business and the Australian Chamber of Commerce in Myanmar. Today's panel consists of economists, financial service providers, and legal experts who will discuss the causes and consequences of the current financial crisis in Myanmar and the potential ways out of the crisis. Today's webinar will be moderated by Mr. Christopher Hughes, who's the chairman of the Australian Chamber of Commerce in Myanmar. He is a legal expert, founding partner of the SCM Legal, which is one of the legal independent law firms in Myanmar. Chris drafted the Myanmar Companies Law 2017 and Myanmar Investment Rules 2017 for the government. So without further delay, I'd like to hand it over to Chris. Chris, it's all yours.
Thank you very much, Professor, and it's wonderful to have the opportunity to collaborate with you and the Center for Global Business, the South Asia Research Network, and of course AustCham Myanmar, who I'm representing to present this webinar. Thank you all for joining. We hope you find it an insightful session. We have excellent speakers and a program. After some short presentations from each of our experts, we'll move into a panel discussion with them, but there'll be plenty of time for audience Q&A. So those who are watching and have questions issues they'd like to raise, points they'd like to make, please put them through the Q&A facility that you can see on your toolbar, and we'll get to those at the end of the session. As was mentioned, I'm the chairman of AustCham. I've opened offices for a couple of international law firms in Yangon, now working with my own firm there. I advise on business, investment, and reforms in Myanmar. I've been doing that for about 8 years, and I've worked on some fairly significant, projects and transactions in telecommunications, financial services, and other sectors. As mentioned, I've been very fortunate to be involved in some of the key business law reforms that occurred there, but I've also worked with government previously on a number of major transactions that they were having. So, having that opportunity to work with government and senior officials, including a couple who are now in continuing very senior roles, has given us some real insights into the country. Now, as a resident investor and long-term believer in Myanmar, I was very worried by the impacts of COVID in 2020. However, sort of what seemed like a successful election process in November 2020 and the new detailed economic reform and recovery plan that was being developed and that I'd seen and commented on along with many other stakeholders, gave us some cause for hope towards the end of last year. So I, along with most other people around the world and inside Myanmar, was deeply shocked, devastated really by the impacts of the political crisis in 2021. Of course, some of those impacts are felt very closely by us, and I'd mention our good friend, our colleague, former AustCham director Sean Turnell, long-term advocate for Myanmar, a mentor of the economic reform team in Myanmar. He is a casualty of this process. He's currently in prison. He's at risk. I was happy to receive news from people today in Myanmar, some news reports there. He has been vaccinated along with a number of other prisoners. So that's at least something we can be thankful for, but we very much worry about Sean and have him in our thoughts. But just as we were as we are still coming to terms with the impact of that, and struggling to sort of see how things could get any worse, really we've become even more heartbroken by the latest wave of COVID that's sweeping Myanmar. It's just completely devastating the country. It's impacting friends, staff, colleagues, clients, government itself. From top to bottom, COVID doesn't discriminate. The health system simply cannot cope, and the situation in dealing with the latest wave and crisis of COVID is really badly exacerbated by the political situation at the moment. So it's really incredibly difficult times in Myanmar. Talking about those impacts, or people much better qualified than me, we'll talk you through the detail of some of them shortly, particularly in the financial crisis that's being experienced. But what I've observed in terms of most severe impacts at the moment are on health, as I mentioned, safety and security of people, severe limitation of rights and freedoms of people since February 1, loss of livelihoods, and many businesses at risk right now, particularly local businesses, particularly small, medium enterprises, absolutely desperate for liquidity, which is just not there. Severe operating constraints for all businesses, and here I guess this is where I'm seeing most of the things with more of a foreign client base. So impacts, operational constraints in financial services, limits in telecommunications, in personnel, just getting people to work. Now, of course, with COVID impacts as well, major challenges on the people front for organizations, logistics, supply chain disruptions, major reductions in government services, much of it originating with opposition to the military government, stalling of reforms, slower, less predictable decision making in government. And now we're also starting to see the impact of many expats who are working in Myanmar, leaving the country, working remotely, or taking up opportunities elsewhere. A really vibrant group of Myanmar society, known colloquially as repats, so Myanmar people who had lived, worked and been educated overseas, who had returned to Myanmar over the course of the last 5 or 10 years, are now themselves looking to leave the country and leaving the country in significant numbers, other skilled workers and other people sort of leaving Myanmar. So a real drain on capacity there. So all of this adding up to, of course, a significant reduction and withdrawal of investment as well. And I stress this is simply an economic impact. The social, political, health impacts go much beyond the economic situation. I would say, sadly, that I've also observed what has been a fairly limited and a fairly ineffective, frankly, international response to the crisis in Myanmar at the moment, including from our own government. So let's hope that the international response becomes more coordinated and more effective over time. In understanding the implications of these impacts, in trying to understand them, what I can say is that having done business in Myanmar over the last few years, we could still feel the impacts of the political turmoil of 1988 and the years that followed that, particularly in human capital and Myanmar's infrastructure base. Much work was being done to address that, and over the last close to 10 years, some significant gains have been made. We can't really predict just yet where the current situation is going to go, but even on a sort of optimistic case of a return to some more stability, perhaps some kind of quasi-democratic, more open system within the next couple of years, I think we can assume that the effects of February 1 are going to be felt in one form or another for another generation. So this is very significant to the country's development. But the Myanmar people are resilient people. They've lived with adversity and will continue to do so. They'll continue to press for change. They will get through this, but they'll do even better with our support. So one thing we can do right now is to support a joint business chambers initiative. AustCham is participating in that along with some of our fellow international chambers. It's taking shape. We're raising funds for oxygen supplies and other medical equipment for COVID relief. We'll be releasing information on that shortly, so please connect with us to find out more and contribute if you can. But of course, another key step towards supporting Myanmar is increasing our understanding of a complex country and a very complex situation. And that's what we're here to do today. So please let me introduce our first speaker to discuss the causes of the banking crisis or banking crises around the world and their macro effect, looking particularly at the case of Myanmar. Our speaker is Associate Professor Deb Dalal Malik. He's from Deakin University. He's Associate Professor of Economics in the Business School there. His primary research areas are macroeconomics and development economics. His current research topics include resource misallocation, international capital allocation, and monetary policy in developing countries. He's interested in the impact evaluation of microfinance programs. Previously, he worked at the Research and Evaluation Division of BRAC, Bangladesh, which is the largest NGO in the world. So we're very, very fortunate to have him present to us today. Please let me hand over to Associate Professor Deb Dalal Malik.
Thank you, Chris. So let me share my screen. Can you see everyone? Okay, thank you very much. So many thanks to Center for Global Business and Monash University, especially Shahriar, for giving me this opportunity to discuss this interesting and timely issue. So I'll divide my time into two issues. The first is a more general discussion on the banking crisis, just to give a brief account to what is a banking crisis, what causes it, and what are the likely effects on the macroeconomy. I'll exclusively focus on macroeconomy because some other panelists, they are expert in the microeconomic aspects. So I'll draw from past research at the cross-country level. So this will be suggestive, but not conclusive. Then I'll move to the Myanmar case, and then I'll try to connect the cross-country findings with Myanmar's current situation. So move. So a financial crisis can be characterized by a situation in which asset prices declines sharply and business and consumers are unable to pay their debts and financial institutions experience liquidity shortages. So it may be caused by bursting of a speculative bubble such as house prices, stock market crash, a sovereign default when government fails to fulfill its debt obligations, or a currency crisis when the value of domestic currency sharply depreciates against major currencies such as US dollar. So it is also often associated with a panic when investors sell off their assets in the fear that asset price will decline further. This is also associated with a bank run as depositors withdraw money from their savings accounts in the fear that bank might fail. So both panic and bank run are self-fulfilling. So banking crisis is a part of that broader financial crisis. So let me now go to banking crisis. So there are two conditions that usually defines a banking crisis. One is when bank becomes insolvent, and another is when bank becomes illiquid, or a combination of both. I'll come back, but before that, let me talk about what is a systematic banking crisis. So a systematic banking crisis occurs when many banks in a country are seriously insolvent and or illiquid at the same time. It may be all banks are hit by the same exogenous shock, which can be out of control of that particular country, or failure in one bank or few banks that spreads to the entire banking system in the country. Okay. So let me elaborate these two conditions here briefly. That in the first case, that banks' liabilities become larger than its assets. In other words, there is negative equity or negative capital. So this might happen, for example, when real estate prices collapse, or an increased number of bankruptcies in the non-financial sectors where banks usually lend. So banks' loan becomes bad loans. This might also happen due to a sharp decline in the value of government bonds that banks hold in the event when a government stops paying its obligations. In the second scenario, which is illiquidity, people rush to the bank to withdraw their deposits, and there is less available funds to withdraw. And this is also self-fulfilling. So a bank can be solvent, that means it has a positive capital, but still it might be illiquid. It does not have enough cash when the depositors come to withdraw their money. There is another situation, which is interest rate risk, when value of bonds held by the bank decreases as a result of rising interest rates. And in this situation, interest rate on its deposits is higher than on its loan. So bank is making losses in this kind of situation. So let me talk about what causes a banking crisis. So remember that it is hard to generalize some common causes of banking crisis. It is also difficult to separate the causes and effects of banking crisis. Each crisis is unique, and therefore both causes and effects depend on the country characteristics. So here I try to give some evidence from cross-country research, which I think should be considered as suggestive, but not conclusive. And some of the factors will also be relevant for Myanmar. So the first is weak macroeconomic environment. What is that? So when countries' macroeconomic fundamentals are not strong, especially when economic growth is low or inflation is high or real interest rate is high. So these are the situation or environment when there is the likelihood of banking crisis is higher. And countries with poor quality of institutions, especially in terms of law enforcement, are also at high risk. There's another situation which is called explicit deposit insurance scheme, which is some form of government protection that would be provided in the event of failure of financial institutions. So this explicit deposit insurance scheme has been found to have a negative effect, since it encourages excessive risk taking by bank managers, and they sometimes make bad loans. We have seen what happened during the global financial crisis sometimes. Another issue that has been found to be weakly significant, which is called terms of trade. Let me define it. It is the relative price of export to import goods, and it is exogenously determined in the world market. So these terms of trade have been found to have weak independent effect on banking crisis, but note that terms of trade shock certainly has direct negative effect on growth. So it can also work indirectly as well. Okay. So let me go to now some effect of banking crisis on macroeconomy. So I'll not focus on all the aspects. So I'll briefly mention that, and I'll focus on those things that is more relevant in the current situation of Myanmar, that I believe still is very hard to predict or speculate what is going on, but okay, I'll try to do that. So banking crisis, okay, it slows down economic growth and sometimes very severely, so that it might take several years for GDP to return to its pre-crisis trend level. And this is not only because that a reduction in the overall supply of credit, but also a composition of credit, that a larger reduction in intangible assets that includes intellectual property such as patents, trademarks, copyrights, related to some tangible assets, which includes land, equipment, and inventory, this kind of thing. And we know that investment is the most volatile component during business cycle fluctuations. That means that it fluctuates with the largest magnitude during expansions and recession. So that investment as a share of GDP, it's on average declines or it is lower by 1.7%, and it's for a prolonged period of time, about 8 years. although the magnitude varies across countries depending on the country's other characteristics, such as level of financial development and so many other things. This is an interesting point that in fact I didn't know before, is that systematic banking crises have a larger negative impact on entrepreneurship in terms of the rate of startup business creation. So what is the mechanism here? Because recession is usually caused by a negative demand shocks. So aggregate demand is low. And also because of banking crisis, there's a widespread credit constraints, and which is more acute for new businesses. So it retards new business creation. It negatively affects entrepreneurship as well. So let me move. So there are some other reallocation effect, but I'm going to skip that. Let me talk about the government debt. In fact, government debt is also a cause of banking crisis, not only an effect. So as I mentioned before, it is really difficult to separate cause and effect. So the increase in the effect on debt GDP ratio is obvious, because during crisis government debt increases, and as I mentioned, which is also a cause of banking crisis. And at the same time, during crisis, GDP decreases. So the combined effect is that the rapid and large increase in government debt related to GDP. Even there is some evidence that during financial crisis, terrorism increases, especially in the developing countries, in fact. So what happens? Increase in unemployment and political crisis join hand in hand. And what we have recently seen, looting in South Africa, although in a different context. In fact. So let me talk about so these two factors, that human rights and informal sector, are perhaps more relevant in the context of Myanmar, what is happening now. So banking crisis has a negative effect on human rights, and particularly in the non-democratic countries. So the mechanism is the following mechanism. Politicians or governments in non-democratic countries, they buy loyalty from the citizens. They spend money to buy loyalty from the citizens. But tax revenue decreases and public debt increases during crisis. So politicians face significant resource constraints in buying loyalty during crisis. And unemployment also increases. That leads to socioeconomic discontents, and which in turn induce citizens to challenge the political status quo. But the government is unable to buy loyalty during economic crisis. So politicians increase repressions to suppress the threat of revolution. So this, I don't want to speculate, but I think this might be an interesting or important issue, what is happening in Myanmar now. Another is the size of the shadow economy, or the role, informal economy, that is also important. So shadow economy works as a shock absorber during a crisis. How? Because formal economic activity is disrupted during crisis, and the size of the shadow economy increases during the crisis. But it has also a negative effect. How? Because larger size of informal economy means that there's a lower tax base for the government. Government is unable to raise tax revenue. It is unable to tax the informal sector or the shadow economy. So the latest reliable data that I have, in fact, the share of economy in Myanmar is above 50% in 2007. I don't have any update. And not only that, and this is the largest in the East Asia region. Okay, so far I have said all negative effects of banking crisis. Are there any positive side effects in the long run? So banking crisis may bring some important institutional reforms in the financial sectors, and these reforms are more market oriented, and crisis also make political institutions more stable and accountable. And this happens in both democratic and non-democratic countries. But note that this institutional reform occur only in the event of major banking crisis. Okay, now I'll see how this is relevant for Myanmar. Okay, so let me move to the next slide here. So let me briefly mention last banking crisis in Myanmar. And it is important to understand that the institutional setup, the current institutional setup before February 1 in Myanmar. So Myanmar experienced a prolonged financial crisis in 2003, which was triggered by collapse of some informal financial companies. The crisis quickly spread to the banking sector. There's a panic, bank run, flight of cash, and liquidity crisis. But what was more worrying was the response of the Central Bank of Myanmar, which at that time was merely a money printing machine for the government. So instead of giving liquidity support, it imposed restrictions on withdrawals. Not only that, it recalled loans from borrowers, at least some portion. And this worsened the situation rather than improving the situation. So what happened after this crisis? Yeah. Subsequently, there's a major reform in Myanmar with the help of international partners and donor countries such as the World Bank, IMF, and Japan. But it took quite some time. And some of the key features are the following here. The Central Bank of Myanmar was given some autonomy, of course, not full autonomy. So the Central Bank of Myanmar law was passed. This law disallowed the central bank from purchasing primary issues of government bonds without the approval of the parliament. So that is, this law restricted the government from borrowing from the central bank. However, the central bank could purchase existing government bonds from the secondary market. Second is that the Myanmar adopted managed floating exchange rate regime, so which acts like some kind of absorber of external shock during a crisis. Flexible exchange rate, but it is not fully flexible. It's some kind of in between fixed and flexible exchange rate regime. And other reforms include an interbank settlement system that allowed consumers to use non-cash payment instruments that include debit and credit cards, and expansion of bank branches outside the major cities in Myanmar, and also explicit deposit insurance scheme. But as I mentioned before, that the merit of this scheme is contested fact. Okay, so now have a look at where is Myanmar now. Yeah. Okay, so this is mostly about the banking and financial development in Myanmar, and for comparison, I'm presenting data for some other countries from the East Asia region, and these data are from the IMF and the World Bank, and the data for the latest year available, like in most cases 2020, or not available, then 2019. Okay, so the first column shows the bank credit in the private sector to GDP ratio, which is usually considered as a proxy for financial development of a country. Second is the number of borrowers per bank borrowers per 1,000 adults. And third column is the number of depositors per 1,000 adults. We see that here the red is Myanmar. Myanmar performs worst in the region. In fact, the next to Myanmar is Brunei and East Timor. But in all respects, Myanmar's performance is worst. Now, when you look at the historical pattern of the financial development in Myanmar, we see that except Singapore, all countries were at the same level in 1960. All the countries, they have moved up, they have improved their financial development. But the Myanmar, which is given by the red line, bottom line, solid bottom red line, almost no noticeable change over the last 60 years or so in terms of their financial development. See that. Okay, let's look at other two important factors that is related to the business, or at least entrepreneurship. So percentage of firms that uses bank credits to finance investment. Another is percent of firms that uses bank credit to finance working capital. Remember, these numbers might vary year by year. So I have taken average of last 10-15 years. Once again, Myanmar performs worst compared to any other country in the region. Then what is the takeaway from here? So Myanmar is still very much financially underdeveloped and also economically underdeveloped by any comparison, I would say. And people rely less on banking for doing business. Is it an indication of any, say, large informal or shadow economy? I don't know. Or maybe only large corporations have access to finance, which are also controlled by the government. So these, many of the informations I tried to get from IMF or somewhere is not available, is available for many other countries except Myanmar. So it's a bit hard to compare many other important factors, but I want to leave it here and pass the floor to the next, to Chris.
Okay.
Do you want me to stop sharing?
Yes, I think that'd be great. Thank you very much, Professor Mallet, for your presentation. Setting some, I guess, theoretical context to this, but also having some great comparative data to present to us to try to make sense of what's happening in Myanmar at the moment. Taking that a little more locally and with the benefit of some real hands-on experience now, we'll look at the current crisis in Myanmar and its financial services impact with the assistance of Mr. Neil Waller, who is the Chief Risk Officer at Wave Money in Myanmar. Now, Wave Money is the leading fintech business in Myanmar. It's the leading mobile financial services business in Myanmar, really emblematic of some rapid and significant change that had occurred in the country over the last few years. Neil joined the company in March 2020. He's Australian, one of a few Australians in Wave Money, including its CEO and a prominent Australian figure in business in Myanmar. Prior to joining Wave, he worked in financial services with a major Australian bank for over 30 years. For 12 years, Neil's been in senior leadership roles, including risk management, where he's responsible for operational, compliance, and credit risk functions. During this time, he worked in Australia, Hong Kong, India, Singapore, and Japan. He's a graduate management qualification from the Australian Graduate School of Management and is a graduate of the Australian Institute of Company Directors. He's currently back in his home city of Melbourne, but very much engaged in his day-to-day business and work with Wave Money. So Neil, please let us have your insights on the current impacts on financial services.
Thanks, Chris. Thanks for the introduction. I'll just share my screen, if I may. Can everybody see my screen? Yes, thank you. I'd like to start this just by perhaps highlighting a few of the events that have happened since 1st of February, which, as Chris pointed out before, was a shock to all of us. And some of these events are perhaps a bit more macro, but they also have a micro impact on the business, which is Wave Money. And I think if you look at the sequence of these things, there's some consequential outcomes which have created what we now call the financial crisis in Myanmar. And the first of those was the initial shock from the political events of the 1st of February, which had two immediate impacts. And as somebody who spent a lot of time on business continuity planning, you can never plan for everything. But this was one of those events that you hope that you never have to have a plan for. But one of the immediate impacts was that there was a disruption to internet services. And as an employee of a fintech company, that has a significant impact on your ability to manage day to day, let alone for the community. And surprisingly enough, or perhaps unsurprisingly, Myanmar has come a long way in terms of its internet, or basically the ecosystem that exists around social networking and things of that nature. And smartphone penetration has been quite significant in the last 5 years. And so the internet played a pivotal role in the way that people communicate in Myanmar. But probably the biggest impact that occurred straight after the 1st of February was that the civil disobedience movement, which is basically the population protesting against the military, brought to a halt bank operations. And so for the better part of 30 days, all banks were closed. Now, the immediate impact of that was that people said, well, what about my savings? Where do I get cash from? Are the ATMs still working? Whilst there was a limited ATM access, there's also a personal security issue, and not a lot of people felt safe enough to be standing out in a queue with 100 people waiting for the ATM to dispense cash. So if you think about that in context, if you're a saving account holder, you're worried about your savings. How do you get them? And if you're a business which operates on cash, the immediate impact of that was that people said, well, if I can't get my money out of my bank account because the bank's closed, what do? I'll start hoarding what I've got. Then we had in mid-March, which was something again, which was motivated, I guess, a little bit by the use of internet services and mobile communications, that the government mandated a shutdown and a blockage of 4G. Which had a significant impact over 6 months or 6 weeks. And that really did sort of put a crimp on anything that was digital, including obviously being part of a fintech, the operations of Wave Money. That then culminated up at about the end of April to what we now call a cash crisis or liquidity market, which dried up. And I use the word liquidity in 2 ways. That is physical cash, that is what you have in your wallet, and secondly, what you have in your bank account. And both of those things work together to create the crisis we now find ourselves in. And this is probably a little bit out of what Professor Debjala was saying before, that what we end up with is a playbook which looked very much like 2003. That is, the lack of liquidity, which is not helped necessarily by the central bank, but also a restriction on how much you can withdraw from your bank account, i.e. about US $300 maximum a day, which basically plays into trying to stop a run on the banks. And then you end up with what we have today, which is basically a lack of liquidity in the entire market, lack of access to your own savings, and lack of access to physical cash. Then, of course, to top all that off, and as Chris articulated before, the health crisis that's now occurring in Myanmar it's almost beyond belief. Anecdotally, I know of companies and firms which have 20% of their entire workforce infected as we speak today. And those individuals often live in multi-generational families, and the whole family is sick. Lack of medicine, lack of medical assistance, no hospital beds, lack of oxygen. It is absolutely catastrophic. So anything that I'm about to say is probably a bit dated, because this has only really occurred in the last 2 to 3 weeks, the outbreak of the Delta variant, which has really started to impact, as I said, public health, but it also has an impact on everything else, the economy not being, obviously being one of those. I'll just move to a couple of micro graphs, if I could, or micro slides. What we've been looking at is we use money transfers, which is our company's business. It's a bit of a proxy for the economic health. And if you look at where we started in January, which incidentally was probably the high watermark of our business, and we've been in existence now nearly for 6 years, probably the high watermark in terms of volume of money transfers. And as it gradually started to wind down, we now sit at ourselves in June with a level of volume which probably takes us back to the company of 2018. Now, this is not something that's necessarily going to stay that way, but it is emblematic of the problems that have been created by lack of access to liquidity generally. And that manifests itself in another way as well, in that we've seen an uptick in digital transactions from the first wave of COVID back in March 2020. And the rationale for that is that people, like everywhere else in the world, didn't want to be handling physical cash in case that was a method of transferring a COVID infection to them. So what we saw was a fairly significant increase in digital transactions. And again, January was the high watermark for that. But as the internet services were impacted in February, and then the 4G in April, it dropped off. Basically, it was reduced by a factor of, well, hundreds of percent. But we've seen a gradual comeback in that, nowhere near the levels that we had in January. And we expect that to continue as a trend, although if you do throw COVID outbreaks on top of that, it does tend to suggest that maybe the growth would perhaps taper off a little bit. But again, if there's any good news out of anything that's happened recently, there has been a recovery in people actually transacting digitally. Now, all of this leads to some micro and macro aspects of the way that we view the market risks at the moment. And obviously, there is a lack of cash in the banking system due to the CBM, the central bank, having liquidity constraints and the community hoarding. But that flows all the way through to businesses, for example, who then can't buy the stock and commodities. Everyday purchases by general consumers are crimped because they don't have cash and they don't have access to their savings. Well, they have access to their savings, but at levels which are obviously restricted by limits that the central banks put on. And this has affected every financial institution. It affects banks, it affects mobile financial services, it affects micro financial services. And to probably answer Professor Malik's question before, is there an informal economy? Absolutely. Was it large before 1st of February? It always existed, but it certainly made a bit of a comeback in terms of money changers and money lenders in an informal economy. I don't know what percentage it is, but it is out there and it has grown significantly since the 1st of February. The other thing that does play out with all this is that because of the economic downturn, a lot of businesses are no longer viable. And what that leads to is banks who have been large lenders to potentially the SME market or to farmers and things of that nature will start having a large level of non-performing loans, which they'll have to write off. And that has an effect on their equity base. Can they raise more capital? Probably not. How bad will it get? It's impossible to tell, but if we use the 1997 Asian financial crisis as a guide, it isn't beyond, well, it's probably possible that some banks might have potential loan write-offs of 20 or 30% of their book. Now, that's not going to be anything that's positive. That could create a run on all of the banks and takes further cash out of the system. I don't think it'll lead to a collapse, but it doesn't help. And a bank's balance sheet needs to be maintained in a way which makes sure it's solvent, and there's a liquidity aspect again, which Professor Malik talked about before. One of the other things which is really, really concerning is that there is a large microfinance industry, and that was part of the reason that the informal economy has reduced over perhaps the last 10 years, because microfinance started to provide the funding, particularly for farmers and SMEs and the general population. Now, they are reliant upon banks funding them so they can fund downstream. And if a bank fails or decides it wants to call in its better loans and actually calls in some of the loans they've made to microfinance, that could have a knock-on effect to the activities of the general community. So that's one that I think we have to really, really be mindful of, that the microfinance industry has played a really important role in economic growth. If it doesn't exist in the current format, then it will have a direct detrimental effect on the rest of the population generally. The other one is that it's unlikely that any supranational support by way of cash inflows is going to be available in the current political inquiry. And by that, I mean the World Bank, for example, the IMF, or any other supranational. And that does have a significant impact, along with multinationals who were in the country. Some of them have left, and they had major projects which they were looking to complete or start. That would have been an inflow of capital into the country. Instead, there's likely to be an outflow, and there won't be too many people looking at Myanmar at the moment saying, I think we want to do a large project if you're a multinational, or whatever it would look like from the perspective of 2 years ago, for example, when Myanmar was regarded as an attractive destination for inward investment. The other thing that's happened recently is that due to, well, even now due to the COVID impact, a lot of bank branches can't be fully staffed. In fact, I've heard issues around some branches have had to close because everybody's sick. And there's been cost cutting as well required by banks, so there's less bank branches. And that impacts predominantly, or particularly in some cases, rural populations and farmers. And they are a significant part of the economy, particularly the agricultural sector. So it's been nothing good in the last 3 or 4 months. And COVID at the moment, the outbreak has just exacerbated all of that. I might just pause there.
Okay, thank you. Thank you very much, Neil. Never easy to deliver news like that, but we do have to come to grips with it, and the data you've provided is really helpful. I think it's something we all do need to understand, and it really brings it home just how devastating this is to the population in Myanmar. I think what was really helpful in your presentation as well, following on from Professor Malik's, was to help us conceive of the financial system in Myanmar as certainly the banks, which are under significant stress, but mobile money services such as yourself and microfinance and allied services, which are reaching what is still a very large unbanked population. So the impact of financial crisis is potentially greater than it had been previously, because the sector has expanded through those mechanisms. So thank you very much for your thoughts on that. To go further into detail on that point, let me introduce you to Assistant Professor Russell Toth from the University of Sydney. He's going to look at that broader impact of the recent events. He is a senior lecturer in the School of Economics at the University of Sydney. He's a development microeconomist focusing on the development of the private sector in emerging markets. He's been conducting research in Myanmar since 2013. Before we were live, we were discussing the many trips that he'd made to Myanmar for research. And his focus has been on micro-entrepreneurship, microfinance, digital financial services, social media, and agriculture. He's a member of the Myanmar Economic Association. So please, Russell, could you please let us have your presentation, and then we'll move to the panel Q&A. Thank you.
Thanks, Chris. It's a privilege to be here and to try to raise awareness in any way we can for the situation in Myanmar. Certainly my thoughts are with our colleagues like Sean and many Myanmar friends and colleagues who are dealing with a lot of the numbers that we're kind of summarizing here. Can you see my slides? All good? Yeah, okay, great. So just to tag on what Professor Malik and Neil talked about, I just want to put a few more numbers on kind of the broader economic impacts of these issues, especially since the coup on February 1st and this really devastating third wave of COVID that's just emerged in the last couple weeks. So, bottom line, there was a really big kind of break in Myanmar's political and economic history about 10 years ago, as the military-led government decided to liberalize the economy. In those last 10 years, there's been some really sizable economic gains, and the events of the last year and a half or so are really set to push those gains back off the table. So from 2011 to 2019, Myanmar was one of the fastest growing countries in the world in terms of GDP growth of 5.6 to 8% GDP growth depending on the year. Like almost every country in the world, Myanmar had slow to near zero growth last year as COVID started to break out. Since the coup on February 1st, so prior to the coup, the World Bank had estimated a kind of a bounce back 5.9% growth for Myanmar in 2021. Soon after the coup, the World Bank revised that to plus 5.9 to minus 10% growth. And in their latest Myanmar Economic Monitor report that came out last Monday, they revised that to negative 18%. And you can see here the breakdown by, in the biggest hits on industry and services. Agriculture is a little bit less hit, but still, devastating minus 10% for agriculture. So I'll just go through a few other different kind of microeconomic outcomes under that. So in terms of employment, a recent ILO report estimated that since the last quarter of 2020, so in the last 6 months or so, they estimate 1.2 million job losses, about 6% of the workforce, and total hours worked declining by 14%. So even people who've kept their job are working less, probably earning less. The biggest hits in 2020 as COVID emerged were in the garment sector. A lot of garment orders were canceled. Of course, tourism and hospitality, since the borders have been closed. Those are two sectors where that are heavily dominated by women. So the layoffs have been concentrated among women. And since February 1st, those sectors have been again further hit on the order of 25–30%. Construction has also been heavily hit. There's also been a lot on the migration front. A lot of Myanmar nationals returned from neighboring countries like Thailand, or were unable to leave to go and work in neighboring countries. And we also, especially since February 1st, see a high rate of domestic migrants returning from their urban areas where they were working and maybe sending money home back to the land, to rural areas. So there's likely a big reduction in remittances, so sending money home from these neighboring countries or from urban areas in Myanmar. On the poverty front, it looks like poverty is set to double basically since the onset of COVID. So poverty was as low as 25% in 2017 and was even below that in 2019, just before COVID. Recent estimates think that that number could be back up to 40 or 50% by the end of 2021. So that's kind of setting Myanmar back to where it was pre-2011. So a couple World Bank estimates put poverty at 42% in 2010, 48% in 2005. So it's kind of setting the poverty rate back to where things were 15 years ago. Of the people who have newly fallen into poverty in the last few months, 60% are in the high agricultural production zones in the Delta and Central Dry Zone, a quarter in the hills and coastal regions, and about 15% in the largest urban center of Yangon. And the largest increases in poverty since February 1st are in urban areas, given all of the disruptions that my colleagues have referred to. Just complementing the time series that Neil showed based on mobile money transactions. This is based on some work that I've done with colleagues at the International Food Policy Research Institute in Myanmar, tracking poverty trends over time. So just to, there's a lot of stuff going on in this graph. So on the x-axis is the date by month, and on the y-axis is an estimate of the poverty rate. So this is first for urban areas. So the yellow bars are based on a phone survey that we conducted with, I won't go into the details, but basically it's with families that had recently had children in the last 3 or 4 years. And then the red is Google Trends data on mobility. And I don't have time to go into details. You might be worried about Google Trends being misleading, especially during the recent internet shutdowns. To our first approximation, it seems that the algorithm is able to do fairly well. So you can see that the yellow and the red have a remarkable correspondence, where in the periods where we had surveys, where you see the yellow bars. And so then we can project the rate of poverty based on Google mobility data in the red. So you can see, just if we, the green bars are just tracking the kind of the first 2 COVID waves in the coup. You can see that we'd estimate urban poverty at around 36%. And this is probably just missing the last couple weeks of mobility impacts due to the COVID 3rd wave. And then the same graph for rural areas, we'd put the poverty rate, if you look at the far right there, about 53% currently in rural areas, which is, most of Myanmar's population still lives in rural areas. In terms of agricultural production, I was worried when COVID was emerging that there would be a big shock to agricultural production in 2020. That wasn't really the case. There was a small decline in rice production. There was even increases in production in sectors like maize. Certainly some areas of the agricultural economy were impacted, especially people with tradables and perishable produce. Agricultural trading and credit was affected, but overall the agricultural economy wasn't devastated in 2020. since February 1st, the disruptions have been more severe. So the financial frictions that my colleagues have talked about, maybe we'll, in the Q&A, we'll talk about the Myanmar Agricultural Development Bank. There's been really rising import and transport costs. Fertilizer prices are up by 50%. So there's a growing wedge between farm gate and urban retail prices. And I think we're much more worried about food security and a real negative shock to the agricultural economy in 2021, and then feeding through to food stocks in 2022. So there's legitimate concerns about a growing food security crisis in 2021 and 2022 as the agricultural sector is likely to contract. Now, on the other side, the military government now controls the Ministry of Agriculture. They claim that rice planting in 2021 is on trend to be at kind of normal levels. So there's at least some other numbers that are pushing the other way. So we'll see how things look as the monsoon harvest starts around September, October. But according to the IFPRI estimates, 44 to 54% of households are expected to be food insecure in 2021. That's a jump of about 20% since 2015. The most vulnerable households are those with under 5 children and or pregnant women relying on daily wages or remittances. Okay, so that's just a bit more context around the kind of broader humanitarian impacts, and I look forward to discussing more in the Q&A. Thank you.
Thank you. Thank you very much for the presentation, Russell, and to our preceding panelists as well. And also thanks to participants. We've got a healthy number of questions in our Q&A box. So we're going to move to our panel discussion now. We had some points for discussion noted down, and I will try to weave in the questions we've received as well and direct them to our panelists to obtain their insights on those. So let's kick off with that. We've got about half an hour remaining before we close. So let's get into it. First question, and direct this to Professor Malik and also Neil. Maybe you have some thoughts on it as well. And that's it picks up on some of the questions we've received too. So this is for seeing a way out of looking at it as a cash crisis. What is the way out of the cash crisis? Is there an ability to navigate this cash crisis without either causing a collapse of the banking system or rampant inflation? So Professor Malik, would you like to give us your thoughts on that, please? Oh, you're on mute, Professor Malik.
Sorry, I apologize. Okay, thank you. So, okay, first, we, or at least I, do not know whether it is simply a cash or liquidity crisis or also a solvency crisis, because we do not have most updated data on bank solvency in Myanmar. IMF is not releasing the exact numbers, but based on the IMF information before the political change, especially Myanmar government requested and received IMF assistance. In the first tranche, it got more than $350 million. In the second, immediately before the coup, it got another more than $300 million from IMF to address its balance of payment problem. So second, and this crisis is not, this banking crisis, or you call it financial crisis, is still yet to know, but this crisis is not independent of political crisis, but it is a consequence of political crisis or an existing crisis aggravated by political crisis. Third, although the exchange rate has depreciated, but still not enough to call a currency crisis. At least it has to drop at least 25%, that the definition, standard definition use over a very short period of time. But government is perhaps worried about a currency crisis, as we see some signs that the Central Bank of Myanmar is selling US dollars to avoid a large depreciation. Fourth is the COVID situation, for which some information available, but still all over the world probably do not have much or exact information how COVID has impacted on the Myanmar economy. I'm sorry, Russell has given a very nice presentation, and we see that there is another effect of COVID. So, in fact, we know, and even there are some few reports, even in the Economist magazine, that democracy scores have gone in wrong direction in the worldwide during the COVID. Autocrats are gripping on their power, and even some democracies are behaving non-democratically or less democratically. And Myanmar is another example, correct? So here is the role of Central Bank of Myanmar that's crucial. But I think the recent change in the leadership of the central bank immediately after the coup, in fact, when there's a bank revolt and then top officials from the Central Bank of Myanmar were replaced by the military, and that gave a wrong signal. And historically, Myanmar people probably do not trust their institutions, in fact. And then this kind of change in the top tier of the Central Bank of Myanmar gave another wrong signal. It is so at currently, probably I would say that after the political change, the limited autonomy that the central bank used to enjoy, that is curtailed again. So now who is controlling the central bank? So all these go against gaining citizens' trust and confidence, and which is, I think, the crucial for recovery. And the effects are self-fulfilling. Lack of trust and confidence alters people's behavior, that in turn affects economic outcomes. And there is also a role of external help for bailout. Who is going to bail out? So economic partners of Myanmar who can help or who might help, they are also non-democracies now. So China or some other only non-democratic countries are friend of Myanmar. So what is the likelihood of getting external help to bail out the economy? And probably this does not bring about any trust and confidence. So I'm a bit skeptical about I don't want to say that it's going to collapse or whatever it is, but it might be something very prolonged crisis. That's what my first reaction, probably.
Thank you. And Neil, would you like to pick that up too?
Yeah, thanks, Chris. I guess I'd probably echo the comments of Professor Malik there, that this is not a short-term fix that's likely. And the restoration of public confidence in the financial system is priority number one. And that will potentially mean that people will perhaps, well, some people who have been hoarding hard cash currency, and particularly US dollars and to a lesser extent gold, will feel confident enough to start releasing some of that back into the economy. But I don't think the central bank has got a lot of levers to pull on this either. They don't have access to foreign inflows, which I talked about before. There's not too likely to be the IMF walking in tomorrow and saying, let me do a career on you out of the 1997 Asian crisis, where the IMF basically ran the Korean economy for 3 years. I don't see the IMF stepping in to do that at the present point in time. I think we're with this for a little while. And I'm not sure that there is an immediate solution. There is a real potential for inflation to get away at some point in time, should the central bank decide to basically inject liquidity into by getting the printing presses working again and things of that nature. But I do have the concern that with COVID coming in over the top of this, we've just added another 12 months to whatever might have been likely to be some sort of recovery to, well, not to normality, but some sort of improvement.
Just one point to add to Neil's comment, that the German company, it's called GX Devrient. Okay, I'm not pronouncing correctly probably, and that supplies raw materials required to print Myanmar currency, which is Kyat currency notes. They threatened in April that it would suspend supplies of that raw materials. So I'm not sure, and if that happens, or it has already happened or not, then how is Myanmar going to print money?
Yeah, I believe that has already happened, but I think there was some talk that they'd found an alternative supplier. I don't know whether that's right or not, but certainly the German company did suspend its operations, yes.
Might have helped to inadvertently helped to control hyperinflation in the process, at least for a brief moment. All right, we've got, just to change tack slightly, Neil, I think this is one for you as well, and maybe we can also get Russell's thoughts on it. And you know, the characteristics of Myanmar as where the formal banking sector still plays a relatively smaller role in financial services and support. Let's talk about the impacts on fintech, mobile money, and perhaps, you know, other microfinance, other elements of the financial sector. Looking at potentially also one of the questions that came in was about potential for further decentralization of financing, so matching borrowers and depositors sort of outside the banking system. Would you like to sort of share any thoughts on that and future directions for non-bank financial services there?
Yeah, thanks, Chris. I guess I talked about the informal economy before. It's always existed in Myanmar, and there has been the ability for people to connect from a borrower and a borrower or lender point of view. I think that is probably playing a role today. In fact, there was a terminology which was called the hundis, which were basically money lenders and money changers who have always existed in the country. We understand that has come back in a much larger way since the 1st of February. I think that, you know, in some ways, the central bank tried to deal with the informal economy by allowing a lot of people to open up microfinancial institutions to lend into that particular sector. But as I mentioned before, there's a fair bit of stress in that particular part of the financial ecosystem, which probably isn't going to help anybody in the short term. But again, I think there is. Again, this all depends on how the central bank see this. And there is always the potential, I suppose, for the central bank to provide some form of assistance if they felt it necessary to the microfinancial industry, financial services industry. But the informal economy will be playing a bigger role at this point in time. But it is very, very informal. I mean, I think it's a little bit like in particular villages or townships, for example, there is people who are prepared to lend money to individuals, probably at interest rates which would be outside of what you would expect to pay from a bank and things of that nature. But it, in its own way, is probably providing a valuable service at this point in time.
Okay. But before going to Russell on that, Neil, maybe just a bit more of a comment from you, not looking so much at the informal economy that you're talking about, but mobile financial service providers such as yourselves and
Sure.
other fintechs. What's the future hold for you in this environment?
Yeah, I think as the statistics I showed before would sort of bear out that the digital part of our business is growing, whereas the more traditional part, which was basically our network of agents who were providing cash, that was the bit that was hit earliest because there wasn't the same amount of cash. But even the digital business still requires a degree of liquidity to be available, and that's people's bank accounts to transfer funds from a bank account, for example, or cash and pay that into their e-wallet, which is the digital part of our business. We see it continue to grow. I think the limitations on that are more around, again, the macro aspect of who's got liquidity. And we rely on that, and we rely obviously on the banking system to provide some of that. And we also rely on the banking system because that's where we have our trust accounts and things like that, which are a requirement for operations. But there is no doubt that digital will continue to grow. I think it will be crimped a little bit by the current environment with COVID, but and it may not get back to levels pre 1st of February, but we do see that as a part of the formal system that will probably continue to be a valuable part of the whole ecosystem.
Okay, thanks, Neil. And Russell, would you like to offer any thoughts on that and additional comments really about impact on microfinance and what that might look like in the future in response to the current the current crisis?
Sure. Yeah, glad to do that. I'm actually writing a pretty extensive report right now on the impacts of COVID and the coup on the microfinance sector and rural finance. So it should be out in the next few weeks, or if you want to drop me an email, I'm glad to share that with anyone who wants to see it. But just as a high level summary, you know, the microfinance sector in Myanmar before 2011, it was basically a couple of UNDP projects. And then there was a microfinance reform in 2013 that really provided a framework, and the sector has grown rapidly. So, you know, as of now, I mean, prior to the crises, you know, microfinance sector was issuing about 3.5 or 4 million loans a year. So if you think the average household in Myanmar has around 4 or 5 people, that's around, you know, 15 million people that are affected by microfinance. So maybe a quarter of the country. So it's sizable, and certainly reaching a lot of people that aren't reached by banks. Since COVID hit, basically during each wave, either the government restricted microfinance institutions from collecting loans, or there was just a lot of disruptions. Their borrowers weren't able to repay. So we went through waves of non-payment, and microfinance institutions basically haven't been able to access new capital. So since, you know, May 2020, they're basically recirculating what they can collect, mainly to existing customers, and more in terms of loans that start to repay immediately, like enterprise loans, rather than agricultural loans, which are seasonal. You might lend for, you know, 4 or 5 months. In terms of the effect of the banking sector, you know, 75% of the borrowers and assets in microfinance in Myanmar are represented by a handful of MFIs that are mostly funded by international debt. So you know, some MFIs in Myanmar have been borrowing from the domestic banks, but I don't see like a huge risk from, you know, domestic banks. So far, international lenders have been willing to keep extending those loans and allow the sector to kind of keep holding on. So I'd say the majority of the sector has debtors that have been very compassionate to the sector over the last 18 months. We'll see if that changes as things go forward. The Myanmar Agricultural Development Bank is the largest lender in Myanmar in terms of number of borrowers. They're extremely important in the agricultural sector. About 90% of their lending is to the rice sector, mostly small and medium rice farmers. Based on a lot of survey data that I've had access to, MADB performed really well in 2020. I think that was one of the reasons that the agricultural sector was actually pretty stable in 2020. But they're in the midst of a repayment crisis right now. They've given farmers until, I guess, 2 days from now, the end of July, to repay their loans if they want to get new credit. And it looks like less than 20% of farmers have met that threshold or will meet that threshold. So we're going to see a lack of access for like small and medium access to credit for small and medium rice farmers from MADB, which is a huge shock to that you know, core staple. So I guess, yeah, those are the two areas, microfinance and MADB, that I can speak most specifically to.
Okay, thanks, Russ. I mean, we do a little bit of support for microfinance sector in our business too, and just one thing I observed, in addition to the problems that you've identified, and it's good to know, a lot of it is development finance supported and I guess other concessional finance supported, but there was new capital available for some microfinance institutions, but actually moving money in and out of Myanmar at the moment is incredibly difficult, which is to do with you know, central bank policy and nervousness around foreign exchange management there. So further constraint, you know, we had examples of these were tended to be agricultural financed, agriculture focused institutions, and it was a real race to try to ensure that new money was available onshore to lend to farmers before the onset of the monsoon season, so that rice crop could get planted. So I think that's probably only going to those sorts of impacts are only going to continue. And then of course we have the downstream impact of well, getting even into food security and things like that, which we'll talk about a little more in a moment. So thank you for that comment. Now, why don't I pick out a couple of other questions from the Q&A, and these are really not necessarily interrelated, but I think they probably fit nicely more into your area of expertise, Professor Malik. One of our audience members was asking us about the possibility of and risk of hyperinflation in Myanmar. Another person was asking about whether what was the prospect perhaps of Myanmar moving back towards adopting the gold standard. And then a further one, which I'm certainly interested to know the answers to this or thoughts on this one. I don't have any particularly myself. Was about maybe whether there was any transition to increased adoption of cryptocurrencies in Myanmar as a way to navigate current challenges. Did you want to try to give some thoughts on those very disparate questions for us, please? Oh, you're on mute again, sorry, Professor.
So then, there are three separate questions. So let me clarify. One is on hyperinflation, second is on gold standard, and third is on cryptocurrency.
That's right.
That's
right.
Yes,
three easy ones for you.
It's not easy because all about speculation here is coming, and you know that all this usually expectation. Many of the economic outcomes are called self-fulfilling. That means if you expect something and if you change your behavior accordingly, so then it quickens that kind of outcome. So for example, during COVID here in Australia, everyone expecting is that there will be a shortage for toilet paper. Actually, there was no shortage. Then everyone rushed to the supermarket, and the people's panic, that's self-fulfilling, because that created the shortage in toilet paper. So unless the most important thing is the trust and confidence in the political system and in the banking system, central bank especially, that is very crucial. There is a chance of very high inflation in this case. Say for example, I think the government or the military government or the central bank, it realized that, and I got some information this morning. One of the panel members gave me, but I can't go in detail. But the Central Bank of Myanmar is selling now US dollar now to stabilize the exchange rate now. So it clearly gives a signal that the government is worried about the future too much. And this exchange rate depreciation and then hyperinflation, these are exactly correlated. And now, so let me tell you what is happening. There is already a black market in Myanmar already developed. So some brokers who have cash in hand, they are demanding a large percentage of the amount withdrawn, set 9 to 10%. So we should be paid back by customers when they eventually get the funds on their account. So there's already a black market. Now the question is, if there is not enough, if the government cannot print enough money, that's the question. But it's still now borrowing from the, so let me clarify here. So the government is trying to borrow from central bank. Now the question is, when the government issues bond, who is going to buy that bond? It's going to be a junk bond, because government has, because of the economic uncertainty risk, government has to offer very high interest rate on government bonds. Even then no one will buy. So if this continues and if the government cannot restore trust and confidence, then I think yes, there is a chance of hyperinflation. But it is too early to make any specific comments, probably, or too early to say anything conclusively, I would say. Second point is going back to gold standard. It's a bit of economic theory. It's kind of no. When you have your exchange rate fixed, then you lose control over your monetary policy. totally. Okay, so no way. I don't think that any country in the world will go back to gold standard. Cryptocurrency, mass of the information is also kind of hidden. Yes, there is a possibility, and it also depends on this internet and how the government blocks information. But anyway, yes, there is a chance of going more into cryptocurrency, and there is a chance of hyperinflation, but I would say no chance of going back to gold standard.
All right, thank you very much for that response. Now I'll give both Russell and Neil an opportunity to add anything to that if they'd wish, or we can move on to the next question.
Just a couple of thoughts on inflation. I mean, we are seeing prices go up in certain areas. So I think there's a few different forces. There's money printing, and then there's shortages of stuff that people want relative to demand. So a lot of demand is depressed right now. People are, hoarding gold and jewelry and cash and not wanting to spend very much. So that should depress prices. On the other hand, there's a lot of shortages of things. So you might want something and it's precious and you'll pay more than you would have paid for it. And then there's money printing. So as Professor Malik has mentioned, the money printing enterprise was greatly disrupted in Myanmar, but now it seems to be back online. So, how those three forces interact to get, really hyperinflation, I think you need to start money printing, these other consumer demand and supply forces are also generating, price increases of tens of %. So
I agree that. One more quick thing, when you have a very high interest rate, that inflation rate has to increase to adjust for that. So it also depends on the interest rate. How does that goes depending on government borrowing as well.
All right. Well, thanks. Sorry, Russell, you're on.
Yeah, on the crypto
thread,
since I'm a crypto fan. I think in the short run, Myanmar is a cash economy, and you would have to think of a way for people to buy stuff with crypto, for people to accept it, and for it, for a widespread currency to accept. So maybe in the long term that's possible, but I don't know if we have an example of any country. There's high use of cryptocurrencies in countries like Nigeria, and you could see it pick up, but you need a way to buy it. People often need to access cryptocurrency and KYC through a bank account or some other financial institution. So in the short run, certainly not. Maybe in the long run, it could be an option.
Okay, no, thanks for your added comments there. All right, let's move on to a different area. And this is, again, looking more at broader economic impacts over the next, say, 1 to 2 years. We've talked a little bit about agriculture, and Russell, you gave us some thoughts on impacts in garment manufacturing, tourism as well. But it's going to impact every sector, certainly, to a very large degree, but unevenly. So the ones, I guess, that come to mind as most at risk would be agriculture, garment manufacturing, energy, construction and infrastructure, and tourism. We've touched on some of that in the presentations, but I'd like perhaps Russell and Neil to begin with to add any further comment they'd like to make on that. Some of our participants have been asking about impacts in agriculture and food security as well. So could you just describe, add to any of your previous remarks on impacts there in the next 1 to 2 years, please?
Want me to go first, or okay?
Yes, please. Yes.
Yeah. So I think that we need to zoom out. There's two major drivers. One is the health crisis, and like everywhere else, there isn't a trade-off between the economy and health, like with the COVID situation. So that that's a massive tragedy that's rapidly happening in the last couple of weeks, and that's going to disrupt everything. And then there's also the political crisis. There's potential for things to get worse and to have more violence going forward. So I think that's what makes it so hard to predict, is both of those are major things that are, in some ways outside the economy, but directly impacting the economy. So, there's a lot of, this isn't a politics talk, but certainly much broader issues around foreign intervention and other questions there to resolve those issues. And I think, a lot of the economic things could be resolved. I mean, it seemed like prior to this third COVID wave, some things were stabilizing economically in May and June. The recent World Bank report documented that some garment orders that had been canceled had been renewed. So it looked like there was some movement, some positive movement before before this COVID wave hit. In terms of agriculture, I mean, again, we're expecting every sector to decline. I think agriculture is slightly more resilient for a number of different reasons. A lot of the big agribusinesses in Myanmar are actually net savers with the banks. So, the Myanmar banking system, to a first approximation, takes net savings from large agribusinesses and others and lends it out to enterprises that have land in the large cities. So there is a level of financial resilience, but of course, if a lot of those large agribusinesses do hold their funds with banks, and right now they're having a lot of trouble withdrawing and moving funds. So we are seeing disruptions there. Of course, there's border issues. The land borders, like to China, are important export borders, and a lot of those are getting blocked because of the broader issues with COVID again. So yeah, as I said in my slides, I am worried about a bigger drop in food production in 2021 than there was in 2020. I think there's, real food security crisis potentially looming as we get into the fourth quarter.
Thank you. Neil, did you want to make a final quick comment there?
Yeah. I agree with Russell in relation to the agricultural industry. I mean, it is the lifeblood of a fair proportion of the economy, and certainly in our business, it's a large part of our business. I think international sentiment around the garment industry is going to be particularly important. Are international buyers prepared to again enter into contracts with the garment manufacturers? And that's a huge employer as well. And as for the tourism industry, I don't see that happening, going anywhere anytime soon. So I think, there is things which won't recover, but the key to some of this too is the fact that a lot of the international investors who had projects about to start or had started have pulled out. And unless there's a change in sentiment around that, I don't see there being much happening in the construction industry either. So I think agriculture is the one that's the most resilient for sure.
Okay, well, thank you very much, Neil. I'm going to hand back in a moment just to Professor Shahryar to close out our session. It's been a terrific discussion. Thank you to our audience members who submitted questions. I'm sorry we didn't get to all of them. There were others touching on some very interesting issues. Maybe that means we have an opportunity to meet again and discuss this further in another session down the track. So we'll keep note of those, and thank you very much for your participation. And please let me hand it back to you, Shahryar, to close out. Thank you.
Thank you, Chris. It was an excellent discussion. I'd like to thank Russell, Neil, and Devdulal for your informative and insightful discussion and question and answer session. Special thanks to Chris for moderating this event so well. So we have recorded the event and we'll make it available through our website. So all the participants will be informed, and we'll share our the link with you. Thank you very much for your time. Thank you for participating and asking questions. Thank you so much. Bye.